everyone. Thank you for joining us. We are here with Carl Streicher, a local lender with Cornerstone Lending. So we hear a lot about the R word today. Can you talk a little bit about that?
I sure can. Well, the R word is recession. And it's interesting. It doesn't take Nostradamus to figure out that there's ebbs and flows and cycles to any economy, any period that we've gone through. And we've had the longest positive economic increase in the United States in the history of the United States.
Right.
We've never had such a long-running economic growth, and we know that with any growth we're going to hit a curve and we're going to come back down, and that leads to a recession. So the confusing part for a lot of people is just the definition of a recession. They don't know what that even is, and it's an economic term. It's an economic term that talks about gross domestic product 2 quarters in a row, so only 6 months, of declining values in the gross domestic product. GDP is what you'll hear in the news. When we do hit a recession, the recession is going to be more like those from the earlier years.
Right.
Not what we went through in 2008.
Right. So what is the benefit, in your opinion, of purchasing a home sooner rather than waiting until later in today's market?
Well, right now in the economic situation that we're in today, and it's projected in the short-term near future, interest rates are at historic lows. So we still are locking in interest rates well below 4%. I always get scared, I locking somebody in, telling somebody that I put them in at a 2 3/4 rate. Those things are happening today, but there's usually points and things like that. But generally, Fannie Mae, Freddie Mac, they're talking about rates around the 3.4, 3.5% rate today on a 30-year fixed loan.
Right.
So to take advantage of where the current interest rates are today, and to get ahead of where the home values are going in the future, we are still coming out with projections. CoreLogic just came out and said next year we're looking at a 5% again appreciation in home values.
Right.
So to be able to lock in those home values where they are today and capitalize on where the low interest rates are, it's just a winning formula.
So what do you see as the opportunity for people to create home wealth through home ownership?
Haley, there's 2 major components to somebody building their wealth through home ownership. One is natural appreciation. So whether somebody has a loan on a property or not, it's irrelevant to this part of the equation, and that's appreciation of the home value. So as that home goes up in value, you're creating wealth. For anybody who does have a mortgage on that home, they're able to actually, by making their monthly payments, portions going to interest, a portion's going to principal. That principal is going in your own pocket.
Right.
That's just future savings for when someday you sell that home, or you need to do an equity line and pull it out. Or I've got folks who are in the older community right now who are even considering reverse mortgages and taking that out all the way until life expectancy.
Well, great. Thank you for sharing so much wisdom with us today. I really
my
appreciate
pleasure.
it. I'm sure everyone learned something or two out there. So thank you so much. Thank you for being here.
Thank you, Haley. I really appreciate it.
Of course.
All right.